Alright everyone, welcome back. So it's been a while since I've spoken about the dividend portfolio account, and it's been a while since I've actually deposited into the account, but today we'll be taking a look at how much money I've funded this dividend account and which stocks I've been allocating into. Now the pound has become quite weak against the US dollar. We can see that some of the lowest points here, while there's been a slight recovery to $1.15, what it means is that if I want to invest, say, £1,000, then the amount that I get in US dollars is much less than it was, say, 6 months ago. And with the likes of the Trading 212 platform, if we buy into, say, Amazon or any other US-based company, we are being hit with an FX fee when we buy and when we sell. And so naturally it becomes more costly during that process. And at times you have to ask yourself, do you want to be investing into US-based companies when the FX conversion is really low? Or would you rather allocate into UK-based companies where you're not impacted by any FX fee and any conversion? And so that's the decision that I made recently to focus on more UK-based companies. If we take a look at my account on the history section, we can see in terms of the different transactions we have, there's a total of £3,700 that has been funded into the account and has not been converted, which means I've been spending on UK-based companies. And the approach that I've taken is to simply look at which company is in the red the most. Now, of course, that's different to how it is now, given that I've averaged into these companies a little bit more. But the specific companies that I brought into was that of Persimmon. We also have Asura, followed by Dwent London, Tesco, DH Smith and GSK PLC. Now the way that I've weighted this was that Persimmon was most in the red, around 40% down, and I've allocated the bulk of the funds. So we can see £2,000 for Persimmon and then another 700 as well. The one thing that these companies have in common is that they are all UK based, and they were all companies that were in the red and effectively still are in the red. So taking a look at my average now for Dwent London, we're down 19.13%. This company has been on a decline. If we take a look at the performance in the last week, we can see that overall there's been a sell-off. The last day performance has been on a decline as well. Now Persimmon is one of the more interesting companies out there. The reason because their annual dividend yield is ridiculously high, 18.58%. This company has been selling off. We can see in the last 6 months it's been on a decline. The last year performance hasn't been that great as well, down 52%, and with a year to date at almost 50% as well. But what it's meant is that their dividend yield has gone extremely high. It was already one of the higher paying UK stocks out there in terms of dividends, and that figure has gone dangerously high at 18.58%. And so it's somewhat of a gamble to be investing as high as I have been and trying to lower my average cost. But this is a company that pays out most of their profits in the form of dividends. When it was around the 12-13%, it was still a higher value, but they were able to pay those dividends off with 6 months of money remaining. We can see, for instance, their net income of 2021 was at 787 million with a revenue of 3.61 billion. Q2 of 2022 was still a decent number, 339 million with a revenue of 1.69 billion. So this is somewhat of a gamble, but the stock was weighted as one of the lowest out there, and of course reducing the return that I had. So in the past we're up almost 28%, but now we're at 6.54%. So that's the reality when investment is taken out of the UK. There is a weaker pound, but that does encourage you at times to invest into UK based companies. That's the process that I've been doing, just because the FX conversion that we would lose if we buy into US based companies is not something that I'm willing to do right now. And so let me know in the comments below if you want me to talk about other investments that I make in the future. There'll be a focus towards UK-based companies more going forwards. But that's all for today, so thanks for watching everyone, and with that said, I'll catch you in the next one.